I am not a British isolationist, but I do want a better deal for Britain. But not just a better deal for Britain, I want a better deal for Europe too.
That was British Prime Minister David Cameron today giving his long-awaited speech on Europe. Britons will have a straight in or out vote on the EU if he wins the 2015 general election. This is today's Market Pulse and it's very much a UK-focused show. A major speech last night from Bank of England Governor Mervyn King and the latest BOE minutes and unemployment figures earlier today. Here to make sense of it all is Alan Clark, economist at Scotia Capital. Alan, thanks for coming in. Let's start with how markets will react to all this we've heard from Cameron, especially Cameron. Today so far, pretty much no reaction. Stocks, bonds and the pound all pretty flat.
Well, Gilt's reacted quite a lot to Mervyn King's speech, and I think they probably only saw one side of the argument. He said, make no mistake, we stand ready to ease monetary policy further. But I think what they should have done is read a bit further down when he said, well, yeah, loosening monetary policy isn't without its costs. If you cut interest rates or loosen, you're borrowing demand from the future. So when tomorrow actually comes, you're going to have to provide even more stimulus to make up for the shortfall. So I don't think it was as black and white as the market took it, but you know, Cameron's speech really overshadowed that. And
on Cameron's speech, I mean, now I'm thinking longer term, what will it mean for the UK economy if we are to leave the EU?
Well, this is 4 years away, so I don't think you can trade on it right now. And I think he's making every effort to make sure that we don't leave. I think it was more political tactics. The Conservatives have lost support in the polls, mainly to UKIP. And what he's saying is, well, if you support UKIP, Labour's going to get in through the back door and you're not going to get your referendum on the EU membership. So vote for us, we'll give you your referendum. But in the meantime, we're trying to make the best of the situation and make sure we stay in and it's to our benefit. So I think Cameron would probably tell you, look on the bright side and ignore the risk of us leaving.
I think he actually said that today. He is an optimist. Going back to King, the main takeaways as far as I could see were, as well as you highlighted, possibly no more QE. Let's not play too much with the 2% inflation target, and quite clearly on the pound, it's overvalued. What can we expect, taking all that into account, from the BOE in the next few months?
Absolutely nothing. Yeah, absolutely nothing. I think they'll be sat firmly on their hands. The MPC minutes this morning said as such. I mean, for some members, it reaffirmed their expectation there's no need to do further quantitative easing. Weaker pound, good for growth, but what we've experienced more than anything in the last few years from weaker pound is higher inflation. So I'm not so gung-ho for a weaker pound. The thing that really determines whether you export more or not is whether your overseas trading partners are buying your stuff. The exchange rate's secondary, so I wouldn't be too...
no demand.
Yeah, then no one's going to buy your stuff at whatever price.
Let's finish up on today's unemployment numbers. There seems to be a divergence which is intensifying. Strong, well, relatively strong employment market, but wage growth continues to slow. How do you square that circle?
I was shocked. Given the post-Olympic period, you should have been seeing some layoffs. We saw 80,000 new jobs in the last 1 month alone. Given the typical relationships with economic growth, you would have expected those sort of numbers to be consistent with the economy growing by 3% or more year over year, and we're not. We're pretty flattish. So it's absolutely shocking at the moment, and it's good news. It should help people to continue spending and help a recovery this year. But yeah, I think people are still pretty puzzled by it. OK, Alan, thank you very much. That was Scotia's Alan Clark. Well, plenty of big European equities taking their cues from earnings today. Gainers include SAP, rising more than 2.5%. The German business software group indicated profitability will rise this year, boosted by cloud computing. Unilever 2012 sales growth numbers beating expectations. The news sent the Anglo-Dutch consumer goods company shares to a record high. Plus shares in Novartis up more than 2%. The drug maker says sales will grow from 2014 onwards. Separately, the company slashed the pay of its CEO for last year and cut the salary of its outgoing chairman. But one loser today is Siemens. Its shares falling almost 1% after the German industrial bellwether warned of weakening industrial demand. That's a wrap-up on the movers in Europe today. Join us again for Market Pulse at the same time tomorrow. I'm Jamie McGeever. This is Reuters.